and see how awesome the Tesla chart looks. Y'all. All right. Happy Saturday. Not as happy as last Saturday, but at least we made it through a week and saw what was going on. I spent yeah, mine doesn't exactly, my chart doesn't exactly look like that, but I guess compared to where we were like a month ago, everything is pretty awesome. And we this uh made it through this first week. Um I did, like, there was another SEC filing, one last one. He sold 1.1 million shares on Friday. So that wasn't bad. About twice as many as he did on Thursday. Obviously, moved the strike or moved the stock price quite a bit. Um, and so I went back and I actually went through all the reports, stuck them in a spreadsheet, and um, and I calculated like how many shares were sold and what percent that will be of the 10% that he's supposed to sell. I know there's tons of stuff posted on Twitter, but I always am curious, does one person post it and then everybody just copies it? So I just wanted to double check the math. Math was solid though from what I saw. So we got, if it keeps up at this pace, uh, at 36% already sold, then we have another 2 weeks of this brutality, which at least things, 2 more weeks, that'll be the end of December, and 2 weeks stock market move, like stock price moving. Everybody's looking forward to that. That gives us 2 weeks of recovery. There's also one thing that I don't know about, which is lockout, um, a lockout on shares that insiders can trade before earnings. I didn't look into that. I didn't have time yesterday, but I know there's going to be that. But I'm thinking if almost exactly a third was sold on in the first week, it's probably going to be another 2 weeks and 100% sold of the 10% and done. What's up, Jacob? What's up, Velocity? Stone, I didn't roll my 880 spread and they expire this upcoming week with little tier guy. I rolled, yeah, I rolled mine out just in, like, I would rather be safe than sorry. Absolutely. And sometimes it kind of comes right down to it. I'm like looking at it and I'm just like, well, this probably won't expire worthless, but or it won't expire in the money. I guess worthless is the same thing. But if we just happen to have, like, I don't know, any crazy pressure, could all happen on Friday. This Friday sold 1 million shares, and if it just happens to happen, you don't want to be left, like, you'd rather wait 2-3 weeks for your money. I would rather wait 3 weeks, a month, 2 months, 6 months for my money than to, have it at risk. So that's why I don't have anything expiring next Friday or this Friday. I'm gonna start a tapestry wheel like you. I did not run the wheel on tapestry. I think I may have got assigned some shares at one point, but I bought them during the big pan dip and just sell covered calls on them. And I like it. It looks like it did. I think tapestry did pretty well too, didn't it? And I think I'm just pretty much holding what I have. Good Lord, that's a nice little rocket up. But very solid, very, very solid company financially. I bought it down, I bought it down here. I think $13 or something like that. So we're sitting all good. And it gives you, even though I only paid whatever, $13, it gives you $1 worth of dividends per year. So 13 years, it's free. It's a long, long time. But that's why I'm just holding it. It was just cheap, and they pay the dividends. So um, how low do you think we can go in these coming weeks? 800s, 700s? I don't think I don't think so, because everybody knows, especially institutional investors, investors. Everybody knows once the selling pressure is gone, it's just like right now, it's just a huge spring being compressed, and it'll bounce like crazy. Um, 800s, 700s, I think even retail investors will keep that up. If we went down into the 700s, holy smokes! Like, I don't know, I don't know what you guys would do. I know what I would do. Like, if it's down in the 800s, I'm absolutely leveraging everything to buy as many shares as possible. Absolutely. 700s, good lord, I'll take a second out on the house, or yeah, I'll take a second out on my mortgage and dump everything in there. That'd be ridiculous. I mean, like next year during 2022, we're like 1200 to 1500. That's been my range for a while, but I mean, that's just like, that's nutty. That's like going to the car dealership and they're selling cars for $15. You're just like, what's going on here? Why are you like, what's wrong with this thing? So yeah, I don't see it, and I think, and I really think, even just looking at it, and that's what I said on Friday. Even though it's, I mean, it's super brutal, but the fact there was 1.1 billion, or 1.1 million, sorry, 1.1 million shares sold during this time, like people kept up the buying pressure. So there's enough buying pressure out there that thinks this is a deal, knowing we have at least another couple weeks of selling coming out. So I think that's cool. I also, just looking through the SEC reports, one of the things I did notice, one of them had the low price of 1,000. So there could be, maybe he's not selling if it gets below 1,000. I don't know. I know at the end of the day, Elon doesn't care about stock price. He just doesn't. I mean, the only one memo time he was like, I can't remember, he said, don't let this happen or stock price could get crushed by a souffle. But at the end of the day, like, what is he doesn't need the money. He doesn't care where he sells it at. He's selling this 10% out of principle, and he cares even less about stock traders. He really doesn't. It's like he's totally about manufacturing, creating something, doing something, and people like us who make money out of nothing. That's not very respectable for him. So he's against being able to short sell, so he doesn't think that should be able to happen. But at the end of the day, he just doesn't give a crap about the stock price. And even if he did care, I'm sure he supports his investors, and he should have no issue whatsoever. Like, if you're just buying shares and supporting the company and not trying to play around with the stock price, kind of like we are with playing options on it, like, if you bought it at 1,200 at the high, 1,250 now, I think was the high, a year from now, you're making money. So you can always take rest in that. So I was hoping you would talk about how much he sold. Yeah. 36% is what I came up with. Where did I have? 36 point rebates me. 36.27 is what I came up with. So there's also some questions whether or not the 10% was 10% of his current holdings, his actual shares, or what he had the rights to as far as options and things. But he said it was 10% of his stock. So I mean, he's usually pretty straightforward. I mean, he said he was going to do it, abide by it, and that's it. just done. I'm going to, let's see. So I don't think so, but oh my gosh, if we do, leaps, shares, whatever, but everybody's going to be buying them. The other reason this is insane that it's keeping up as well as it has. I mean, to me, it's that this is beautiful. My account doesn't look beautiful per se, but it's keeping up really well. And everybody who bought calls, and a lot of people were buying them, they were buying anything and everything out of the money. That causes the market makers to have to buy shares, so that artificially inflated the price. Once that once we came into like Friday's expiration, we weren't hitting 1200. The market maker gets to sell back those shares. So there was Elon shares, and that's a gamma squeeze. The gamma squeeze had a relief, so those shares got sold back. Elon shares got sold back. This is the worst news that could possibly come out for the stock price. There's been a ton of news coming out positive for the actual company, so that may have helped it, but you know, I don't know. We may dip down to the 900s, and small account wise, I've been kind of thinking about that. Which is why I really wanted to calculate how many that he had sold and what I think is going to happen over the next couple of weeks. So I think we're going to have 2 weeks of maybe hitting 1,000. I mean, we'll see. Obviously, my thoughts will change if we dip below there, and we'll get the SEC report to see Elon selling below 1,000. The lowest price I saw was 1,000, so he may be just selling down to that point. I also saw no pattern. I was looking for pattern at the prices that he sold, and it looks like it's totally throughout the day, so it wasn't just in the beginning or the middle or anything like that. So there was no patterns to be figured out there at all. I was hoping I could figure out something, but no more on that. What do I think of Rivian? I hope they do well. They're going to have, it's going to be rough. I mean, their valuation is, to me, it's incredibly overvalued. I don't even know what do their trucks even start at. Just kind of curious. Rivian, I haven't looked at it in a while. They have, I haven't even looked at these for a while. 67,000. That's not too bad. That's not terrible. And this guy, 70,000. That's not too bad. But they've got a long ways to go. I mean, they've got to get through their production, their ramp up, any issues, hopefully sell enough. For some reason, I thought these were going to be, I remember hearing like 100,000 or 90,000 or something, but I think the valuation's is a lot too high for me. But it looks more like a traditional pickup, so there'll be that, but they're also going to be competing with Ford, GM, and all those things. So the stock should be interesting. Like, that could be played, but not a company I'm investing in at all. The big thing that Tesla's going to have above it is just straight up like their software and autopilot and everything. How much is the whatchamacallit? Cybertruck? I should know. I ordered one. Is it? We ordered the middle one. I don't even think I heard they like removed all this stuff. Oh, okay, there's just that. But I think I mean, I put down my $100, whatever, 6 months ago, 9 months ago, or something like that, for the mid one, and I think it was $60,000. So Rivian has a competitive price, but they're not going to have the supercharger network, which is pretty huge. And this look is definitely going to be a turnoff for a lot of people, I think, initially. But then when you start to see them all over the place, it'll just be like another thing out there. So selling put credit spreads for the 700 are a wise idea. I don't have any problem with it. I mean, the collateral down, or the premium down there, is still amazing that somebody will give you anything for it. I'm like, take advantage of the volatility and get some time on it, like just in time. That's, I can't tell you what to do, but talk about like that. That feels like the safest thing absolutely in the world. Like, I don't know anybody who, like, the people that I talk to on Twitter and stuff, if they go down to the 700s, people legit are mortgaging their houses. I mean, you'll double your money in a year on a great company. So yeah. Hope it doesn't go below 1,000. Yeah, and we'll see. We'll see. I've been selling put credit spreads when I see some weakness in Tesla, but I want to continue doing it more consistently. And I'm doing pretty far out strikes, only trying to get 5 or 6 per week. Where is 5%, 5 or 6 right now? I mean, keep doing what you're doing. Let's see. Yeah, the only thing right now, just since we know there's a selling pressure, is like just keep them out 2, 3, 4 weeks, something like that. I'm not sure where you're gonna be at strike price, but just really understand and pay attention to what's going on. If you get into any trouble, just roll them out a lot farther. I mean, by the end of December, we have December is January. We have Giga Texas online, Giga Berlin online. Semis are going to be delivered, earnings, production, and the main event is Elon will be done selling his shares. So we have so many things to the upside. So I feel it's like 800, 900, whatever. It's just all super. To me, it's super, super safe, even though it looks very volatile in the short term. In the short term, next couple of weeks, if he gets all done, it's gonna suck. Where you're gonna open up some stuff and go negative on it for a while, but the if you're opening up 4 to 6 weeks out, that next 2 weeks, it's a lot of time. I mean, when we see them drop, time kind of goes slowly. We're just like, oh my god, how low can it go? When's it gonna bounce? Apparently Ford has a decent stake in it, and Amazon has even bigger stake. Yeah, for their isn't, and that's like for their delivery vehicles, I thought. And I don't know, they may do well. I just I know, like, with Tesla doing as well as it has, they almost died. They almost died. There was whatever, they had like another weeks or two worth of cash, like when they were getting the Model 3 out. So I mean, but at least they've paved the way, um, and people still have to get over their range anxiety and all that stuff. There's like I still talk to people every day, not every day about it, but a few times a week where they ask me about the range, and they're like, yeah, I like them, but the range, and what if I want to go on a trip, and they still have all those kind of issues. And Tesla with supercharger network, like that takes care of it. And all I do is I'll plug in a destination. Like I live in Seattle, and like here, you say you go to Arizona, let's plug this in. All right, well you're stopping for a total of 2 hours, here, and here, or something like that. And they're like, oh, that's not as bad. I hope they do well, though. I mean, I genuinely hope they do well. Rivian's IPO is way overpriced. I think so too. That market cap is insane. My guy, you think Tesla semi is priced 10? No, it'll just be like it's weird some of the stuff that's not priced in. I don't think it is. I still think like when it actually comes out, like Pepsi got their trucks this week. I still think we'll see reaction to it. We saw, even though we knew like Tesla was having they were applying to be basically an energy company in Texas. That just got approved on Friday. We did see a little pop up from that, but I mean, Elon's selling kept the price down a little bit. That was one of those. Where was it? 11 o'clock. I think it was this last pop. 11 o'clock here. This little candle. Can we make it look? No. Cannot. Yeah. Anyways, that candle. And then they got the approval. So and like this should be priced in too. The energy portion of Tesla is going to be bigger than the vehicle side of it. Like you think about what you pay, and yeah, cars and trucks and stuff are expensive, but usually like once they're paid off, they're paid off. People pay whatever, anywhere between $2 and maybe $1,000 a month on the car payment, and then they're done. and then they maybe keep it for 10 or 20 years, but you pay a hundred and something dollars. I don't know. Actually, Washington, we have super cheap energy, so I imagine other places pay a lot more. But that's, $100 a month consistently over and over again. And Tesla, like when they actually are able to capture the energy from solar instead of, you know, whatever the other forms of energy, or buy and sell it from people like us who have the solar, and they're just doing arbitrage, that profit margin is going to be so huge. But that's going to be a bigger than the actual vehicle side of things. So no, but yeah, I don't think there's a lot of stuff priced in. People just forget. Market, the more the more I learn about the market, the more I am shocked about how many things are not priced in, or people don't realize it. This is actually the most positive realization I think that I've seen. With people basically holding the stock price up, even though it is dropped a whole lot, but there's buyers on the other side of this stuff. So the realization that on the other side of this sell is probably $1,200, $1,300. It's super awesome. And it popped up a lot, so I don't blame anybody for taking some profit, especially with that news. We, like, in hindsight, should we have closed all the positions on Monday ASAP? Yeah, probably, but I can't predict anything. So it's just a couple weeks, 2, 3 weeks, 4 weeks, 5 weeks, whatever it takes to recover of pain. In your opinion, is it better to roll put credit spreads on green or red days? Red seems to be better. Yep. Yeah, red or particularly volatile times. Cybertruck is $100, great price. Might have to buy some. Yeah, you should buy a few. Yeah, I think it was 50, or I think $60,000 total, because we got the full self-driving too on our truck. But yeah, red days are generally better. But I also realize we can't, like, I guess you can taking it after a dip. So if you grab it like here, any of these little down areas, they are better. Unless you're pretty close to the money and you're looking to roll it out for some credit, then you need to just be above the short strike price. Otherwise, you're probably paying to roll it out. At the end of the day, if that's what you're continuing to do, it really won't matter very much, though. Did a 920, 915 put credit spread this past week and expired worthless. Received $35. Very nice. Yeah, that's good. Greetings from Germany. Keep up your great content. Thank you. That's funny. Oh, so many people from Germany. So I've been talking to a guy. We might do some collab, and it was funny. I reached out to him. He's doing some very small things, and I was like, you remind me of like one of my closest friends growing up, and just something about the way he talked, his mannerisms and stuff. And my closest friend, his dad was from the U.S., and he was in the military. Met his mom in Germany, so half German, half American. And then this guy, I was watching one of his videos, and he was talking about, like, he grew up in Germany in basically a bar where his mom worked. And I was like, oh my gosh, that's too crazy. Too crazy. My ex was from there. Well, not from there, but her name was Mädchen Baurichter. So, and spelled like maker, Macken, but said Mädchen. So it sounds like girl builder. And thank you so much. I have 870, 860 put credit spreads December 17th. I think December 17th is great. And I was looking at that because that's where we have stuff on the small accounts and the IRA. So I was like, crap, if Elon had only sold like 10 or 15%, and it looked like this was going to go on for weeks and weeks and weeks, then I might, then I was potentially going to roll those out, and it may roll them out one more week. But in reality, whatever happens, if he's done 36%, a third of it essentially this week, and then we do 2 more weeks of that, and then we're done, that gives us a full 2 weeks of recovery till December 17th, sorry. So I am just not worried about having buying pressure around there. And I mean, take it for what it is. That's my opinion. I've been doing 890 strikes for Tesla and got $45 per open 40 spreads. I stopped doing SPY spreads since the premium was too low. You got us the right time. I know you just do put credit spreads, but a lot of people I know just got beat up so bad this last. They were doing iron condors, but the last few weeks on the SPY, which I haven't even been watching because Tesla, but they've just gotten beat up on them, like a lot of money lost. Oh, it was probably that. This was probably Wednesday. They probably got stopped out here, and then I think they're all crying because if they just would have held on to it for a little longer, they would have been okay. So I can imagine they opened it up 30 minutes in, and then just like, okay, now we're like break even, coming down. We're super underwater, and then I don't know how far out they went. What is that? 460. But that was a scary one. And then this thing looking like, because it's always funny, like it's easy to zoom out and look at these, but when you really, that's all you see is just straight down, and we're just pattern recognizing creatures, so we see that as a pattern, should just keep going down. And that was an insane Friday on the SPY too. Premium is so juicy right now. It is so good. It is so good. Do you like doing $10 wide or $5 wide? Because sometimes I can't find a $5 wide when I roll out when I'm doing. Yeah. Yeah, I do prefer $5 wide. But yeah, just like you said, sometimes they're not there. So I will, when rolling out, sometimes I'll just do a 2 for 1. And for some reason I never go back and do a 1 for 2. But yeah, I prefer 5. Like my other thought, sometimes people want to do them a little wider, give them a little bit more cushion. And I'll also think about that when I'm opening up things at various strikes. Like if the spread is anywhere near any of that stuff, I'm rolling it out, right? I'm not waiting for it to expire on that Friday and hope for for my last dollar to not expire in the money or anything. So if I have 1,995s, it better be up at 1050, 1080. But if it's at 1010, 1020 or something even close, or if I see anything indicating that thing it's been rolled out. So might as well do the 5 and maximize your premium to collateral in my mind. Yeah, and then of course with the different dates. But if you're going out farther, so like what I did when we had the last big dip at the beginning of the year, I had to roll out till the end of the year. And when you're looking at monthlies or quarterlies, a lot of times they just don't exist, and they're not going to exist until we get closer to them. Then they'll add those strike prices as we get closer to expiration. I'm not sure if you answered this, but what stocks do you think are a good buy? I have a lot of cash currently. That's nice to say. I think Tesla's a pretty good deal right now. I haven't seen anything else and you probably know the only two I really care to add to is Palantir and Tesla, and Palantir took a good beating after earnings when everything was positive. I tried to figure out why, but I I don't even understand everything. Like went through their earnings calls, listened to people's opinions, looked through their balance sheets, everything. I didn't see any anything negative about them at all. So, but I also am like, particularly this last week, 100% of my focus has been on Tesla. Like, I can't ignore it, right? I'm looking at the filings, the price action. I have several accounts where I'm going through and making sure that there's nothing that I do need to manage, because there's a couple of them that I kind of forget about. My third Tasty Works one, which was my original one, that one I completely kind of ignored and forgot about, and realized yesterday I had some stuff I needed to roll out. But this is actually, and I'll tell you the same thing. I actually told my girlfriend this, so she just stuck money into an IRA, and she's like, "Well, I want to wait till next week or whatever, to buy Tesla." She's basically buying half Tesla, 25% Airbnb, and 25% Palantir in this IRA. And I was like, just average in like over the next 2 weeks, at least on Tesla. Like, we don't know if it's going to go down, but we know where it's going to be, just a few months from now. But just average into some stuff that you like, that you think will go up. Luckily, I got all of my SPY condors this week. Wow. That is luckily. A ton of people just got beat up. I feel like it'd probably be better just to do $10 wise, so I don't have that issue from the start. Yeah, that's the other positive. That's the other really good thing about doing $10 wide is, yeah, you don't have to mess with it. But if you look even farther out, sometimes you'll see that there's only $25 wide strikes. So you will have that as well. What portion of your portfolios in put credit spreads? I mean, I have like half of my portfolio is input credit spread collateral. Can you explain your risk management for your put credit spreads? I know you roll it to a further date, but how far out do you go? How close does the stock need to be to your selling strike? There's no real quick answer for that, just because it all depends on what's going on. I look at the price action, I look at the news, upcoming catalysts and events. So there's no just exact rule for, like, I don't just do ABC 1, 2, 3. If there's kind of no news going on, and it's just and if it was just slowly going down, and I know we don't have earnings coming up or some sort of good catalyst, I'll tend to roll them out farther. If we have terrible news, or not terrible news, but news that comes out that just drops it real quick, and I think it's news that should be temporary, and I feel like it should come back up, I won't roll it out as far. But it's anything just based on my research, my readings, and I spend a lot of time, most of my days, listening or reading stuff about it. So anything that makes me feel uncomfortable, I will get them rolled out. And typically to next earnings is a good spot for me, or just prior to the earnings are always a good spot for me. But it really depends. Like, I have 1100s, so those got rolled out till January, because that gives us, after the selling pressure is done, that gives us all of our December and then January earnings and all that stuff. So those I feel pretty good about now, and I can roll them out farther if I think something crazy is going to happen. I wish I had a an answer for that. If that part I could, if like selecting my strikes and dates, if I could just put that into Word or a formula, I could literally just write a step 1, 2, 3, 4. This is my strategy. This is what I'm doing, and let everybody know. Been thinking about selling another Palantir put. Yeah, it's probably a good time. Curious to see how the graph on your portfolio looks for all time on Robinhood. Does the graph tell you how well you are at managing put credit spreads? I don't know if it does or not, but yeah, we can. Let's grab it. And so this is only going to be whatever 2 years worth of 2 years of it. And this was this is us getting started around February when I really started trading. We're negative 60,000 because I've taken 60-some thousand dollars out of the account. And this little bump up, this was the pandemic drop. And we profited off of that by like a lot of puts on everything and some calls on TLT. And then from here, so about April through June is where I was kind of going through and figuring out different strategies, probably just like you guys started. You're just like watching different YouTube videos, reading different things, and trying to figure out like what you want to do, copying some plays and stuff like that. And I realized I was really stagnant. And then I got into put credit spreads. So really from June on, that is where I really started doing the majority of put credit spreads, and the majority of it is on Tesla. So we did have this first run up. This is when Tesla first hit 900, and then we dropped, right? We dropped from almost like 250 down to 130. So we cut the account in half, and I rolled most of those positions out all the way till January. So 2 months from now, some in December. So it was basically like this whole time of it trading sideways or down a little bit, and now we finally get the bump up, and there we had that huge price climb to 1200, and now we are here. So I think I don't know what that tells you as far as if I'm good at managing them or whatever, but that's what it's been, and it's getting more and more heavy. Just put credit spreads. I've eliminated a lot of my positions and just doing those primarily. So like this whole thing here, I mean, this was a big bump up and this little spike here, and what I feel like even though we have those like little spikes, I think in the future we look back like 3 years, 4 years, 5 years, they'll just be like little tiny bumps like this guy. And won't really be consequential. The biggest thing for me is just rolling them out far enough, being patient. Like, all right, so I sold a put credit spread and wanted to gain $50. I collected $50, and we're hoping to do that in 3 or 4 weeks. And sometimes when it goes against us, I need to roll them out 6 months, 9 months, whatever. So just being patient for that to happen. And if stock price goes up, we can also move it up at the same time. So that is. Oh, does the graph tell you how well you are? No, I don't know. Well, maybe the graph tells you that, like, the graph to me, I guess, looking at it, even though we've had some bumpiness, tells me I'm just moving in the right direction, right? And I started this account with $575, so like this is all profit, but it still sucks to be down, 100,000 or whatever, which is, I think that was this week, $100,000 probably from top to bottom, 350, yeah, about $100,000 down. But that's what I expect. I can just expect this thing to kind of continue up. So it says I'm not terrible. I didn't like blow up my account. How about that? But this is also only like a little under 2 years worth of data. This is not me trading this strategy for 5 years or 10 years. It just all makes sense to me what I'm doing, and that's why I'm doing it. And for me, pretty easy to manage. Comes with a little bit of patience. Seeing the account down and super red doesn't ever feel great, but having a plan and kind of knowing what I'm going to do and having gone through it once, having $100,000 drop. Last time it was like way more painful. So this time's way less painful. How soon to the expiration do you manage and roll? So when they're out of the money, like I'm super comfortable with them. The closest ones I'll generally have expiring are a week out, and then I will roll those. But if they get anywhere where it's like freaking me out, I'll roll them out like right away. I don't care. Like if they're already 6 weeks out and I'm just like, this isn't looking good, I can roll it out another few weeks, few months, or whatever. It's just being patient. Because but you also have to understand my thesis and my rose-colored glasses and everything is, in not very many years, Tesla's going to be $3,000, $4,000, $5,000, $7,000. It'll probably split pretty soon. So that's a big part of my thesis. So I have confidence that the price is going up, and that's based on me reading, watching everything I possibly can on it. So that's why I also don't have a problem rolling any of this stuff out. As a 14-year-old, what do you think I should learn in the stock market? I think you're all over the place, man. Just keep doing what you're doing. Read as much as you can. Learn about the individual companies, and I think the biggest thing is the psychology behind it. And just once you actually watch it, to me, a lot of the stocks and things are kind of like another human. Like some people, you can, call them, say you call them a jerk or whatever, and some people are like, and some people are like, what'd you say? Get in your face, right? So you have to kind of learn how these stocks react and how market reacts to different news. And once you kind of learn that, and at 14, like once you've got 10 years under your belt, you're going to have great years, terrible years, like all kinds of things. And I mean, you hang out in the Discord and ask tons of questions, and that's just awesome. I mean, just absorb whatever. By the time you're like 18, like you're just gonna have it all figured out. And at 14, you learn things so much quicker than we do. Cover call or cash secured put? Did I miss it? On what? What do you think about ARK? I like Kathy. I think she's awesome. She's in my background. There's Kathy over here, above me, I guess. I think it's cool. I think she'll have her day. I think it's great for, like the ETFs, just period, are fantastic for not even having to think about it. You're never gonna have insane, crazy growth or whatever, but she'll keep having her moments, where all the stocks just skyrocket. I do have a little bit of money into the ARK funds, like 5 of them, but I like $3,000-$4,000 total, not very much. I like her. I love listening to her. They're kind of a little bit boring to listen to, but it gives you, that's actually, as a 14-year-old, listen to some Kathy Wood. She will give you some zoomed out, bigger picture things that I think are incredibly important. It's pretty interesting. She may be wrong, she may be right, but just you got to listen to a lot of opinions, and then comb through it, see what really makes sense to you. Do I use an LLC to trade? I do. So I trade inside of my TD account is an LLC now. And basically I just need to have enough in there for me to be able to write off different expenses. So even though like the Robinhood, you can't, it's not an option through Robinhood. You can but you can in like TD. I know there's plenty of others, Tastyworks and stuff, but basically I just make sure that sounds funny. I make sure I make enough money trading in my TD account to where I can write off, like, I would write off my phone bill, part of my power bill, my gas bill, part of the mortgage and all that stuff, new televisions I buy. So I just make sure I do that. And I started doing that this year. depending on, it only makes sense. You have to meet certain criteria for it to make sense. You have to opt in as a for trader status, I believe at the beginning of the year, not like at the end. You can't do it when you're filing your taxes. You have to do it earlier. And there's a list of criteria. That's actually, there's a video I did on that somewhere. Somewhere there's way too many and they're disorganized. But but I think there's like, you have to make enough trades. You have to be trading for profit. You have to spend a certain amount of time a day or per week or something like that, doing like whether it's research or looking at the market. So there's certain criteria that you have to be able to do for it to make sense for you to trade in an LLC or even to try to get the write-offs. When they go against you, it seems more difficult to roll them. Well, yeah, because when they're going against you, you're going to be a lot closer to the strike prices. So you're not going to be able to get as much as you would if they're farther out of the money. So like the ones that are my stuff that was 900 is going to be easier to roll than 1,000. And when they're already a ways out, they haven't really decayed that much. So generally that extrinsic value, one big portion of it is the actual is that theta decay, and theta decay really starts happening heavily around 30 days. So if we're taking a position that's already out 30 days, rolling them out to 60, that's not as much as if we have one expiring tomorrow and rolling that out 30 days, because that one that we're rolling from tomorrow or next week has already decayed quite a bit. So yeah, more difficult, but the nice thing is like, it's like, even if you end up paying and it ends up being a debit and you roll it out, at least you're preserving your capital at that point. And if you have to pay $1 or $2 to do it, oh well, I'll pay $5, $10, $20 to save 500 any day. Edward, thanks. You're welcome. What I do. If the credit spreads are really profitable, why wouldn't you just do all credit spreads on Tesla instead of also buying shares? Because I want to own the shares. I love the company. And the credits, the stock, I don't even have to think about at all. Like, it can go down to half price and I still love it all the same. It's like, it's kind of a base for me, and I can use the margin from owning the shares as well. I mean, it's still gone up a ton. Still like what, 5-6 times what I bought it for, and I can sell some calls on it. Like I did sell some 1350s, so I gotta sell against those a little bit too. But the biggest reason is I just love it. I just absolutely love the company, and I get to own part of it. It's one of the best features of my Tesla is the fact that they offer stock. I mean, got the one car, have another one on order, have the solar on its way. So I like it. And eventually, let's say, I don't know, however many years, probably 5 years from now or whatever, when I stop working, then I'll just have all those shares accumulated and I can just sell them off to live as I need. And I don't really even have to mess with trading. Do you choose your credit debit spreads by delta or just price and chart? Price and chart. Good question. Yep. Not delta ever, 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 ever. No, yeah, nothing more than price action. That's absolutely it. Feels like put credit spread is a BG. I don't know. What does BG stand for? Open secret? I don't know why. let's see. I don't know why not everyone is doing it. Enrolling is very important for this. Otherwise, it can be challenging in the winning side. So, I think why isn't everybody doing it? Everybody definitely has their different things that they gravitate towards. I feel like it's just cheating, like playing them, the credit spreads on either side. It just selling premium is the casino side. Okay, so let me think about this. So maybe because like the accessibility for this really has only happened um, over the past 2 years really, and it's become popular. And when we shut down for the pandemic, more and more people actually got into it. So initially, when you know zero, what are you looking for? You're looking for all these. Um, oh, so, oh, big open secret. Okay, gotcha. Um, but so everybody started getting into this, and then what did people look for? They look for how to get rich quick. And how do you get rich quick, right? Well, it's naked calls and naked puts or buying the next stock. That's why you'll see so many. Here's my top five picks for the stocks that'll 5x this month, or here's what Kathy Woods bought. Buy this now and quadruple your money, or here's a play where you can turn $30 into 500 or 5,000, or do this so you can make $1,000 a week. Like all these outlandish things, and none of them are put credit spreads. It seems like so little. Like, oh, here's a play you can make where when things are going right, you can make 10% a month, 20% a month, or whatever. When they're not going great, then you can make 0 a month and roll them out and wait 6 months to collect your collateral. So it's not the most beautiful thing. I kind of forget about this. It's not. It is simple. The put credit spreads, I think they're as easy as they possibly get, but still, for some people, they are not as simple as they've become after you do them for a while. A lot of people just want to buy stock. They don't want to manage things. I can remember opening up some of my first ones and not 100% understand. Actually, as a matter of fact, like the first options I bought, I really didn't get it, and I remember it was like hitting this like button, like, oh my god, am I sure? And then just did it. And then just watch, you watch it go down, whatever your play is, you watch it go down by 20% or up. In my case, I was super lucky in the beginning, that beginning that run up, this whatever, I think it was like $50,000 from $500 in the first like little bit. That was just stupid luck, really. Not completely, because my theory was whatever, pandemic was going to be bad. No clue that it was going to be like this. But that's kind of what I bet on there. And in reality, worst case scenario would have been I would have lost $500 and probably maybe never traded again. So I think we ended up with the best case scenario here. But I don't know why more people don't do them. And there's also the fact with the put credit spread, if you don't manage them, oh, okay. So if you don't manage them, or like, number one, you can lose all your money on any of the put credit spreads, 100%. And one of the reason that I just do Tesla is because I know it inside and out. There are other companies that I've played put credit spreads on, call credit spreads, and I don't know them well enough to know what to expect. So my confidence to just like, oh, well, we'll just roll this out, and this is what's going to happen because I have this event, this selling pressure is coming off, and everything, that's not a thing. I had put credit spreads on Amazon. I don't even know where Amazon is anymore. It was like, oh, let me diversify a little bit. And I think I had, where's Amazon? Amazon's been wild. And I was just like, oh, let's diversify a little bit. And I think they were like 3400s or something. Where was I playing? Uh, when was this? April? Oh no, I think it was like in July. So I was playing some of those, and then we just had like Plummet City, and I just, it wasn't like I knew it was going to happen, and I just don't know that company well enough to go, well, I just have to roll out till this point here, and we should be good. I just really didn't know. So I imagine some people with put credit spreads, they start on an easy company like Amazon, and then they lose once or twice, and then that's not good. Or they do things like people say, well, okay, we'll just do them on the indices or the indexes, which is great until we have some major movement, and the premium is just not as good, which is another criteria for me on Tesla why I play that instead of any other ones. The premiums are fantastic. I know it's going to happen. I don't know what's going to happen short term, but long term, I know it's going to happen. Pay attention to it enough to where I'm pretty much can prepare or change things around just based on what happens. So I think those are some other good reasons where people don't do them. Because if you're doing them on the SPY, the credit received just isn't like, you're not going to compound your account. I don't, maybe you will over time, but just not as quickly. I misplayed on put credit spreads on September dip. Now it's rolled far out. What's the best time to roll it near? On what? On Tesla? Um, it doesn't. When you're comfortable with it expiring out of the money, and you're close enough to do it. So like when I had things expiring out pretty far, I would just once a week, once every couple weeks, when I looked at it, I would say, okay, where can I move it to? For what kind of credit? Can I just move it over here for $1 or two? I don't often roll back, but you just need to look at what kind of premium you can get where. Like what is the market going to allow you to do? If you move it up a couple months and you can collect that and move on, then I would do it. Otherwise, it's also nice if you think something's going up and it's just sitting out there nice and low. It's nice to have a few of them that you're 100% confident in, just collecting a little bit of money too, that you don't have to worry about. With spreads in the small account, do you think we have enough time to stabilize after Elon's selling pressure is over? I'm making sure I have capital roll wider if needed. I do think so, and that's why last night I totally went through um, all of his share sales, because I wanted to understand that. I didn't want to go on what anybody else was saying, so I grabbed the reports, put that all together. Figure we're a third done. This is what I'm thinking. I think we're a third done. I think over the next 2 weeks he'll probably do his second 2/3. We can take a look at it during the week, which of course I will, to see if that selling has changed at all. They've been pretty quick on posting the SEC reports, so it's not like we're waiting the full 3 days to find out what they're doing. So if the amount being sold has changed, we can change it, but that gives us 2 more weeks in theory of selling, and then 2 weeks after that of recovery. And I really think after that point, when selling is done, it's a loaded spring at that point. So I expect some nice upsides. So not the best. I mean, it is like two sides for that small account, and actually even the IRA. One, it kind of sucks that first when they open, like a day later, it goes like way in the money. That sucks. But on the positive part of it is we get to hopefully we make it through that, and that's what the price action does, and then we get to see what that was like, right? We get one more of those under our belt, open one. Oh, it felt stupid. It goes way in the money, and we think about it, and and do some calculations and figure out what's going to be the optimal strategy there and get through it. And then we've made one where we felt, pretty bad for like a little while, and then so next time it happens we can kind of do the same thing. So plus and minus on that one, right? We don't get to grow it as fast as we hoped, but we have a lot of time to do it. Wasn't planning on closing the account at the end of the year. Planning on keeping it for a while. I'm going to roll my 980s 975 expiring 7/3 to January 21st, really? January 3rd? Pop up my. Yeah, I can see that. I wouldn't want anything. Yeah, I wouldn't want anything really sketchy expiring on the 3rd. That is well, we'll find out in the next few days here, but that is a full week after selling pressure should be done. But do it. just roll it out. Um, that way you don't have any worries. Spy. Oh, put credit spreads on. Oh, spy dip. I don't know what the premium's like on the spy put credit spreads that you have or what you need to roll them back. I'm a real fan of Pareto principle, 80/20 rule. What is the most important aspect? I didn't know what that was called. What is the most important aspect of trading options successfully that you would recommend a beginner an option to spend their time learning about? The company that you want to trade them on. So the actual how you do it could be learned in a day. I mean, probably a week. When I first heard or tried to read about it, it took me a little while for it to actually sink in. That part kind of sucked, just because I would like, where you're like, okay, wait, I'm agreeing to sell shares that I don't own, but then I buy this other option that lets me buy shares for more than I'm going to sell them. Like, it was just wrapping my head around that took a little while, but that after you get it is 100. That's just like mechanical. That'll be fundamental. So finding a company that you like to do it, that you want to do your spreads on, or even like whatever you want to do about it, whatever you want to do it on, and just get to know that company really well. Like, listen to some of their earnings calls, look at their financials, get to know that, just so you know what, like, you can come up with your own ideas and your own thesis, and that's the real way you build confidence over time. Pareto, 80/20. I'm a fan of that too, even though I don't seem to implement it. Well, I do some on some levels. I do like having principles. Okay, I was looking up the actual definition of that. Not fundamentals. Um, Not fundamentals. You need to get to know the stock like you would get to know a person, because the fundamentals, like, it's not reacting. The market won't necessarily react on fundamentals. It's so confusing. It's confusing, and you have to just pay attention to the company, what they're doing over time, to see how things are reacted to, and it changes. So it is just getting. It's just like getting to know a person. Every person reacts differently. Every person has their quirks, and their personality can change over time. Uh, but like, when you believe in something, um, you're gonna more confidently, play it. If you absolutely love Facebook, and you understand all their streams of income, And then you can also understand how external forces, what's going on bigger picture wise, are going to affect Facebook, what the competitors are. When this one goes up, this one might go down. When you really wrap your mind around it, you're just going to have a better understanding of why the price is moving like it is. At the end of the day, all the lines and charts, and well, not just the chart, but the like the studies. I don't think all that's super important. You can use some indicators, but understanding why it's doing what it's doing is, I think, the most important thing. Don't over leverage yourself. I will over leverage myself. If the price goes down to 700s or 800s, I will. I have other accounts. I'll just take everything and just shift it over to Tesla. But yeah, not over leveraging yourself is a good idea. And like, you can find, you want to see a company with horrible fundamentals that's doing well, is like Lucid. Lucid has terrible fundamentals. Their balance sheet looks horrid. They have to have everything go right to lose money for like 5 years. It's crazy. Or like, then you're never gonna, fundamentals aren't gonna do anything for GameStop or AMC either. And I don't know what Lucid's fundamentals are. I don't know what they look like. I mean, they probably haven't shown anything yet. What's the fastest you've gone in your Tesla? I don't know. 100 and something. I really don't know. What's your thoughts on crypto? I like put credit spreads and believe in it for the long term, steady growth, but I also do love crypto. Yeah, I think that's about right. I think we'll continue to see rug pulls on any of the cryptos that don't do anything or are worthless. I like the Shibas and the Dogecoin and stuff like that, but like stuff like Ethereum, which is useful, and Bitcoin, which has been proven to be, like, there's enough big names and big money in that. I think that's pretty solid for the long term. I actually was just looking. I was just looking at mine. Where was my? I do have Where's my? I do have this computer. I can't find it. I do have this computer that I'm on right now. Mine crypto. When it's not in use, like when I'm not doing this. I was just looking. We have $1,500 worth of Bitcoin from just this computer. It's funny, but I like it. I've mined it for many years, since the last time it got popular and then crashed back down from 20,000 to 5,000. I think it's a good solid holding though, and 1%, 5%, 10% of your portfolio. I don't see any problem with it. But I just wouldn't stick it all in, like I said, like Doge or something like that. Or in, I'm selling all my positions and buying a Tesla. Are you? Are you for real? I didn't see that. Which one are you gonna buy? I don't think you'll. Well, no, don't sell them all and buy it. Well, unless you just need it for your down payment. Sell as much as you need for the down payment. The interest is like nothing. It's like 1.25, 1.75, something like that. What's your thoughts? Okay, let's see. Get to know the company like a person. So I'll take a bottle of whiskey after the domestic abuse Tesla gave me this week. Yeah, Johnny Walker Black. It's actually what I named my car after. My Tesla's name is Jenny Walker Black, but actually it was because I was kind of him and Han over actually purchasing it, and then so I was drinking Johnny Walker Black when I decided to actually like push the button. Like, okay, I'm just gonna do it. I'm just gonna do it because I was looking at the time. I hadn't researched so much, and I was looking at that or the I think I was gonna wait for the new RAV4 that was gonna come out, and I was like back and forth, and I was just like drinking. I was like, okay, we'll just buy that, and then with the full self-driving too, I was just like, oh, do I spend the extra? I can't remember how much it was at the time, 7,500 or 8,000. I don't remember. Same thing with that. Just bought it. What three books would you recommend for beginning options traders? Uh, I don't know. The ones I've read, I feel like a whole book about it has been too much for the information I need. I don't have any great recommendations for that. Um, the best financial books I've read really are, gosh, what's that? Probably have it back here. Are actually not exactly option specific related, and some of them are good. Read some stuff by Peter Lynch, which is great for investing, but not really applicable to options trading. So I don't know. I learned everything I did YouTube, Investopedia, and doing it. That's what I've done. You're right. Who needs a book when you have YouTube? You're right. And actually, almost every single book you can get on, like, you can search on YouTube and find an audiobook. And it's super more up to date. Like, if you find one that's 5 years old, nobody's gonna show you what to click on your TD Ameritrade or your Robinhood to be able to open up a put credit spread. Option Alpha or Tastywork option courses are great. Yeah, for getting started with options, I haven't. I don't. I probably have watched Options Alpha, but Tastyworks, I loved. I listened to Tastyworks, and then, um, like nothing made sense to me. It sounded like they were speaking a foreign language. So then you kind of go and research and like, okay, what's this term? You look it up and try to catch up. Like listening to Tom Sosnoff, like what is he saying? What is he saying? And um, yeah, then you get back in. Now I can listen to it and all makes sense. And some of it's pretty helpful. A lot of little gems there. I've been trying pretty hard to actually get some reading in. I need to do it. Bought myself a Kindle White and everything. Read one, and I'm more interested. I probably the best books are going to be like psychology books, really, because the whole hardest part is like standing your ground when you have a thesis or you believe in something, um, and everybody else is telling you you're an idiot for buying that company and you end up the smart guy at the end. I think that's got to be the hardest part, or dealing with the psychological pain on the down days. Like the this last week should be the hardest part of my trading, right? Down $100,000 should feel like horrible. Like what are you doing? What's up, man? I would love to talk maps. I don't know that. Let's see more specifically in regards to fundamentals and fair value, warrant liabilities, and income towards NCI. I don't even know what that is. Maps. Which one? Yikes. Oh, did this just IPO this year? Good lord. Ouch. I love Tastyworks. Also, I started a channel of my own where I break down companies and their business model fundamentals. I would love any support you can give. Yeah, let's check it out. Is it just is that what it is? Just under the TNN and Tin Invest, TIN? There you are. When somebody asks me the right time and when the right time to invest, my answer is now. Time the market is gambling. 100%. I like it. The best time to invest is yesterday. The second best is today. For sure. Oh, it's a SPAC. Yeah. I like that I get to know less about these and pay attention to less. Now I just need to pay attention to one. I'll check these out though. I'll check them out. And you actually do have like production. See, I'm just too lazy to do it. I think I've like edited 2 videos my entire time. I'd like to do some more. And the bad part is I have a VA where I can just shoot and she'll totally edit for me too. What time are we? We are the 1:30. Um do you guys have anything else you want to go over today? I think I'm gonna get going. Got some other stuff to finish up, but make sure I didn't miss anything. Oh, weed maps. Oh, is weed maps important? This is more inclusive. Yeah. It's like perfect too, because they're usually like 10 or 20 people and we can BS about whatever. Not just, not just going over stuff that doesn't matter. Weed maps. I remember weed maps. That'd be interesting. Did you do a video on it? I think you did. Yeah, November earnings. I'll have to check that out. I'm kind of curious about it because I don't know where I live. Where I live, I don't. It used to be like where you'd find a store, right? But where I live, like literally, I can drive. They're like Starbucks. I don't need a map to locate Starbucks. And I also honestly I don't know much about the stores. Like, is there price differences and all that stuff? I talked to a couple of my friends that go to the stores. Actually, just one of my friends. Oh, actually, my only friend who uses weed that I know of, he just quit. So, so maybe he doesn't know anything else anymore. But I don't know what value they bring. I don't even know what they do besides having the option or having the actual map of where stuff is. But literally, if I wanted to go find the weed store, I can drive 2 minutes in either directions. They help stores with their online space, delivery, etc. They do delivery? Maybe I'll have to check them out, download the app or something. But man, they look pretty beat up. Did they actually SPAC yet or no? Did they when did they actually convert? I'll check it out. I'll shoot you a message too, like on your channel. See if there's something I can add to it. Maybe, maybe not. Shopify of weed, and it helps stores on the back end. Cool. All right. Yep. I'm gonna get going though. Thank you guys for showing up. Super awesome. Hope you guys all have a great rest of your week, and I'll definitely update. Update with anything that we find on Tesla, of course, during the week. Um, and we'll go from there. What do I think of Zoom? Kathy Wood likes it. I own Zoom. I bought it super cheap a long time ago. It was like one of my top gainers at some point, but I was actually thinking about Zoom today and thinking, I was just like, it's just going to be the thing until the metaverse takes over, right? So, all right, guys, I'm going to get going. Love you guys, and we'll see you on Monday.